Good morning, everyone, and welcome to this week's episode of the Broker Breakdown with myself, James, and Mike here like always. Mike, it's been a warm week so far. How are you liking the weather?
No problems at all, man. This is what I like to see. I'm not a huge fan of winter, so the warmer weather is a much nicer way to get through my weeks.
It was funny, actually. I know me and you are big golfers. I was obviously in Guelph on the weekend because my girlfriend lives in Guelph, but on my way there's actually a course on the way kind of down Highway 6 that opened this weekend already.
I think it's all. I know there's courses that are full year round, but only if the weather permits.
There's one in Niagara on the lake. Queenston, I believe it's called. Or is it Queenston? No, it's not Queen. Oh, it's St. David's. St. David's is the one that's open all year round in Niagara. So when I used to live down that area, we used to play it all the time, even like into like the winter months. And it's actually not a bad course. So definitely can't complain if you're getting out in the colder months to play some golf.
No, totally not. It's that's not me. I'm like more of a fair weather or I want to get out when it's nice outside, but I get those that want to get out when they can, right? It gives them an opportunity.
Yep, I personally still think we're probably stuck in the simulator at least until the beginning of April. And then by that time, I think you'll see some courses possibly start opening depending on how the weather is. Like if we get a lot of rain and stuff, there's no way they're going to open. But if we have still a mild spring where there's not a lot of rain, the weather's pretty warm and everything kind of melts and dries up, then I think you'll see a lot of courses probably open like middle of April at that point then.
Yeah. And then it's just all about the frost, right? At what point, at what time of the day can they get going?
Exactly. But moving into the episode for today, we're going to kind of keep it a little bit of a lighter episode. I know we've done a lot of in-depth stuff recently. We've had a few guests on the podcast, so we kind of want to just do a little bit of a general episode. And I think an episode a lot of people are going to like because this is an episode that a lot of people can save money on. So this week, we're basically talking about general discounts that are offered in insurance on the auto and home side. We're going to kind of break it down between both lines of business, starting off with the auto side. So Mike, you want to go over maybe two of the biggest discounts we see on the auto side?
Absolutely. And the two big ones that always come to mind, I think, that people know about as well are just how you bundle together, right? So typically most will offer up either or, kind of both, a multi-line and a multi-vehicle. So very simply put, everyone probably already knows this kind of stuff, but just to highlight for anyone that is brand new to insurance or again just wants to listen for more educational purposes, multi-vehicle, very simple. You have two vehicles on the same policy, and or you might have two vehicles in the same home under a family, and depending on the company, they provide that. And the other, very simply put, is bundling your home and auto together. So it'll be a multi-line or a combined policy or whatever the insurance companies deem it. But it's when you put your property insurance with the same company as your auto insurance, whether you rent, you own a condo, or you typically have a home. Those are the three big ones. And in most cases, you're looking at around, and I'll say generally speaking, because it does differ between companies, James, but normally they're between about 10 to 20%, again, depending on the company for those discounts.
Yeah. All these discount numbers that we're going to be giving out are going to be very generalized today because, again, with us working with a lot of markets, every market is going to have a different kind of sweet spot when it comes to their percentages and what they give. But I did really like what you said there about condos and even renting, because a lot of people actually don't realize that even if you rent, you can still get that discount. Because I talked to a lot of people that rent and they didn't know that they actually could bundle their insurance and save money. So I really like how you said that point, because a lot of people would not actually don't know that. I'm always usually pretty surprised.
Well, and the big thing about it too, and this is something that I've always kind of highlighted to people, if you rent a place and or you own a condo, both of which, both kind of more a unit type policies, you might be in the area of, $250 to $500 for the year, generally speaking, which is obviously going to be less than home insurance for the most part. And when you're looking at maybe more high density areas, so more of like the GTA and greater Hamilton areas that have a lot more people in, apartment buildings and condo buildings and things like that, you're typically going to pay higher auto insurance prices as well in those cities. So one thing to keep in mind for anybody listening is that in a lot of those scenarios, if you rent a place and you think it's a waste of money, you might save the majority of that back off your auto insurance just by combining those two policies together via those discounts.
Exactly. Yeah. And honestly, it's not even, I always say, especially living in an apartment, it's always very, very smart to have the insurance, even if I know a lot of apartment buildings now require you to have insurance, but even if they don't, I think it's always smart to look at it because again, if let's say me and Mike live in the same building and Mike has a fire in his unit, 3 units up or whatever it might be. And again, there could be damage to a bunch of other units. And again, smoke damage is another big thing that people don't realize, that it can go through the whole building and damage everything. But yeah, having the renter's insurance, not only for the purpose of obviously having a discount, everyone wants to pay less for their insurance, but again, protecting their assets in an event of there being a claim. Again, fires and floods, there could be upwards of 100 units in a building. So again, if someone at the top of the apartment building on the main floor or the top floor has a massive flood and it floods through 4 floors below, that's a lot of units that it's definitely impacting. So
yeah.
Discounts are great, but again, protection is also another good thing to have in the event of there being a claim.
Sure. And on that discount point, if it is, 15, 20% off of, let's say $3,000, just for simple math, you're in the area of between, $300 and maybe $450 off of your tenant's insurance policy, which is going to cover the majority of that too, right? So you're kind of getting that.
They offset basically.
Yeah. And a lot of people, again, don't know that. They'll just get car insurance. But if you can get further protection and get some savings on your insurance, that's a win-win for both clients and us.
Exactly. But moving into the next two for auto that are, again, I think they're pretty common, but just to kind of go over. First one being winter tires. Obviously, if you have a set of winter and summer tires and you put the winter tires on, again, a lot of people have this misconception that companies want it on from certain month to certain month. I usually say to people, if you're going anywhere below about 7 degrees, you should probably have winter tires on, because the science shows that after 7 degrees or lower, summer tires actually don't perform as high as they should. So I know there are still some companies out there, very few, that basically give us a really rough date. They'll say like November to April to have them on, or even some are like October to March. So, but again, those are very, very rare circumstances. But again, from the science side of things, I would always say anything under 7 degrees, I would highly recommend putting your winters on during that time. Again, winter tires, anywhere from about a 2 to 5% discount, a little bit of a smaller discount, but still, for your safety, for your family's safety, and for that little bit of discount you're going to get, definitely highly recommend having them. Moving on to the fourth one here is parking. So there actually is minor discounts depending on how you park your vehicle. So the biggest ones obviously are going to be like private driveway, private garage. If you're in a condo and there's underground parking, you're going to get a tiny discount for that. The biggest one that a lot of people will see obviously no discount for is anything like parking on the street, parking in a massive unsecured parking lot. Again, the discount is so small, but there is a small discount when it comes to where you actually park your vehicle.
One thing I'll highlight too, James, for people on the parking one is that it is, to my knowledge, very specific on the companies that offer that. So it's not industry wide. It's more specific to just a couple of providers that I'm aware of. So
very specific.
Yeah, for those wondering, because I know people have brought that up in the past. They'll get a quote and say, "Hey, I park here. Generally speaking, there's a couple that might look into that. The majority of which don't really care if it's in a garage or in your driveway or whatnot. Just from the data, obviously they're not too worried about that. So that's more of a just for your knowledge, but usually it's not really industry wide, I guess is what I'll say.
Exactly. Mike, moving into the next two, we have student discount, which we can kind of break down in two separate portions. And then we have the conviction and accident discount as well.
I'll do
those two.
I'll do the student stuff, and then I'll let you do more of the conviction or claim one there.
Perfect.
So there's two student kind of discounts through most of the markets that we have, that one of which is student away at school. So if you're on, like, let's say a parent's policy, the vehicles are at home at that, current address, and you're going away to school, depending on the kilometers, and I'll make a mention of that very quickly. I think most are over 100 away. So if you're in the same city or nearby, that discount may or may not apply just because of the accessibility to that vehicle. What they're really looking for is students that are gone away to school, like gone away, a couple hours away, and they're not going to be home every weekend to have access to that vehicle. Basically, they'll come back for whatever it is, certain holidays or maybe during the summer. But the premise behind it is it's a pretty large discount, usually in the area of between maybe 40 to 50% off an occasional driver. So it can make a big, big difference if your kids are away. The other side of that too is not all, but from my knowledge, I think the majority of companies still, or at least a larger portion still, offer like a good student discount. So again, the info on that might vary a little bit between companies, but you're looking between, I think, a 75 or 80% average. Usually you'll have to display a current copy of like your transcript or whatever the most recent semester was. And if you do that, you might get tacked on an extra 10 or 15 off the kids' rate. So certainly helps with kids in the household, James, is what I wanted to point out with those two.
Yeah, obviously kids are going to pay a little bit more on insurance because, again, licensing, not having a lot of licensing years, probably no insurance years. I always say especially to parents, the biggest thing that you should be doing is right away when your child gets like a G1, definitely add them onto the policy, because as a G1 driver, there is no premium to that driver, because technically as a G1, you can't take the vehicle and drive by yourself. You have to be accompanied by another G licensed driver in the car until you get the G2. At the time of the G2, there is obviously going to be a premium to that person, because then at that time they can drive the vehicle. There's a lot of restrictions to when, where, and what like highways and roads they can drive on, but they can technically drive the vehicle by themselves. So, but at least for that year, or however long it might be of having that G1, at least the child is gaining experience and having that insurance experience being basically built up already. And then again, if they're going away to school or they have a really good grade average, again, depending on the company that you have, you could possibly get a bigger discount because they are a good student and they're away. I have a lot of clients that have that on their policy where the kids, they live in Toronto, but the kid might be going to school all the way in like Thunder Bay or something like that. So again, the risk of them driving that vehicle throughout the year is very minimal. But again, for them to have insurance is very, very smart because they're already basically building their insurance for their future.
And for that, you know what, the student away at school discount, there should be one thing noted as well, that it's more for like a family that has vehicles where the parents reside and the kid is on there as an occasional driver, but he is away at school, right? So you can't take a vehicle to school that's in a different territory, have it insured back home with mom and dad, and expect that discount to apply, right? That's a completely different example. This is more or less just for, you know, your son or daughter gaining that experience, but also being away. So it's the insurance company's way of saying, hey, we know they're not going to drive the vehicle every day. We know they're, you know, probably only coming home for Thanksgiving, Christmas, Easter, summer. So in part, we're not going to charge them what the typical occasional rate would be for the entire year. That's kind of the premise behind it.
Exactly. But Moving on from students, kind of going into this one's very, very like self-explanatory, but what we call conviction and accident discount. So I think it's more on the conviction side. There's some, again, very, very few companies will basically give a small discount for not having a conviction or an accident. Personally, I do think it's a little bit redundant because realistically, if you have a conviction or a accident, Mike, realistically, your premiums are going to be a little bit higher. So if you don't have those things, your premiums are going to be lower. But again, they tack on a small, and I'm talking like 2% discount for some companies that will, if you don't have a conviction or an accident.
Well, yeah, the claims ones, the claims free is very company specific. A lot of companies, the conviction free can actually be 15% with some of the big guys.
I didn't even know that.
So like the conviction free, for the people that actually recognize it and that kind of want to reward having being ticket free, it's usually about 15%. And I know about a half dozen to a dozen markets that utilize that percentage. So it's actually pretty big. It's the claim side that's usually small. And I'm speaking one or two, again, not names, but speaking one or two that usually offer like a small claims free as more of a perk or benefit, because the claim side is a little bit different on the than on the discount front. Sorry, is what I wanted to say.
Interesting. I'll have to look up on that because anytime that I've ever done a conviction free, it's always been like 2 to 5%. And I'm like, okay, like it's a discount, so I'm not going to complain about it. And my clients are obviously not going to complain about it. But yeah, I could definitely have to look out for those 15%ers out there then.
Or it just means you got a lot of people with tickets, possibly.
Yes, you do get a few people like that. Don't get me wrong.
Hey, everyone's got to drive. That's not a diss in any way. Just, obviously those that don't have it can benefit. They can benefit quite a bit. Exactly. Yeah, and there's certain markets out there that when you combine a few of these together, we've been discussing, your rate is significantly less than maybe others that drive the same vehicle in the same area that don't have all these. So it's just a way of maximizing your savings, right? They're available to you. If you're eligible, take full advantage of them.
Exactly. Mike, do you want to move into the electric and hybrids?
Yeah, it's a small talking point. I know we've touched on this in more of our EV segments. And currently it's still more company specific. Some have gone away with it. Some still have it. It's usually small. I think between 5, maybe 10%, depending on those that still offer it. Some it's just built in to how the vehicle rates are. If it with the VIN, you'll obviously know what type of vehicle it is, right? But that is very, very simply put, you might get in the area of maybe 5 or 10% if you have either a fully green electric vehicle or even a hybrid in some cases. So that's more of just ask your company if they have something available. If they don't, maybe not get too upset because it's not industry wide, but there are some available. So maybe ask your broker or agent on if those are available for you.
Do you see that changing in the future? Because obviously how the auto industry is going, with a lot of companies going either fully electric or at least hybrid. Do you see that changing? Do you see a lot of companies really taking that discount away? Because if the whole auto industry is moving in that direction, is there really a need to have a discount for that maybe in the next 3 to 5 years?
Yeah, it's a good question. I thought a few years back when it became more common to start seeing them with some of those more forward-thinking companies that we might have seen a shift from a lot of them. However, that the traction on that really hasn't picked up. What I think now might change is as more EVs in different manufacturers are obviously created, you're probably just going to see specific claim data to EVs, right? And as a result, it's just going to be built into the type of vehicle you have. So it might be a slightly lower rate than a similar EV from a different manufacturer. So basically the same way that it's done right now with different cars, right? Where in essence, every car was running on gas before, and every car had a different, kind of rate based on where you lived and its payouts and the amount of theft that happens and all those things we've touched base in the past, right? So I would say to wrap that up, it's probably going to be more like that. but I guess time will tell, right? And I know I never really know, and then it happens. I'm like, oh man, I didn't have the best insight on that.
I think it will be kind of like how like maybe like 10 years ago. Remember when the market started going to like those like backup cameras and all these like preventative things like measures and safety in your vehicles, and a lot of companies started adding discounts for all that stuff, like backup camera you got a discount for,
Right.
like automatic brakes you got a discount for. I even remember some companies were offering discounts for the blind spot detectors. If you had those in your car, some companies would offering discounts for those. But now, like, I see no companies offering discounts for that stuff because it's just they're so common now, and basically every car, even a base model car, basically has all that stuff, that those discounts don't exist anymore. So I do think probably in the next 3 to 5 years, especially how the market's kind of mandated that vehicles basically be made electric moving forward, at least until, like, I believe in Canada it's 2030, but I think as we start slowly creeping up to that year, I think you'll see a lot of companies, they'll just end up dropping that discount because, again, it's going to basically become more of a common thing that people drive electric or hybrids.
Yeah. And you know what might happen is, I mean, as insurance partner companies keep advancing, moving forward, you're just going to see more and more of that data behind the scenes on what the proper rate is for a specific vehicle, like at a specific territory, right? So it's more behind the scenes. I don't think as technology advances, so does the way that we quote insurance, basically. Exactly. At the end of the day.
Yep. So moving on to the last kind of part of the auto side of things, a bigger one that, again, I feel like a lot of people have a really like sour taste about this one, but it's the driving apps. So basically what driving apps are is they're basically an application on your smartphone that basically monitor your driving habits. So like speed, again, this is all going to be like company specific, but majority of them are going to monitor things like speed, time of driving, hard braking, hard turns, things like that. There's a few companies that monitor a few other things, but again, they give a discount mostly on the time of you signing up for the program, usually around a 10% discount. And then on renewal, depending on how your driving habits are, you can get anywhere up to about another 10 to 15. I've even seen up to 20%. So altogether, you can see up to a 30% discount, again, if you're a perfect driver. And again, Mike, I don't know, like why do you do you think it's like a privacy thing that people like are just kind of like turned off on it, that they think that like all this, they're tracking everything I'm doing, and that's why a lot of people like almost like don't want to do these apps?
It's an industry change, right? That it never existed. It never existed more than, oh my goodness, I want to say when I first started 2013, I remember it Intact bringing out the My Drive app back when it first started, in the telematics kind of device was shipped out. But it's just kind of newer technology, right? So with newer technology, people have that kind of big brother mindset that they're looking over them while driving. Can that data be used against them negatively, or is it just solely for, discount purposes? And how do they track or monitor that, right? So there is, I think, a general consumer concern always is, is this being used for the right reasons? And do I care about how it's used, right? If you are that very kind of cautious driver, always kind of doing a very, driving 100, and it's not between, like, let's say midnight and 5 a.m. and, you're very cautious on both braking and acceleration. These programs are there to benefit you, right? They're there to give you 10% to sign up. I think 5 or 10 right away, like you were saying.
Yeah, and it depends on the company. Most are 5 to 10 when you first sign up, and like I said, depending on the company, again, it's going to depend on anywhere from 10 to 15. I've even seen 20, so like upwards of 30% for some companies.
Right. So it's big, and it can be big. So if you're totally cool with it all going, then by all means, you can save big bucks, and that'll also, on renewal, the one thing that people don't always realize is if you have that telematics device and all the other discounts that you qualify for are being applied and you're happy with that partner, it's quite possible that rate you have might not or will not get better with somebody else, because now that driving app info is providing a strong enough, discounted percentage, James, that it's going to be better than other markets. Basically, that's part of the long-term play behind it.
Yeah, I personally think the apps are great because, again, you're giving a discount that you yourself are qualifying for. There's no one else that is basically determining how much you're going to save other than yourself and how you drive. If you are an amazing driver, you're going to save big. And there's no other way to save big than to basically do the app and be a good driver. So I think it's up to the onus of the driver to basically say, you know what, like, I can save an extra 20%. Why wouldn't I do that? But like you were saying too, like a lot of people do see it as a privacy thing. Again, none of the companies use the apps to basically increase your insurance. They legally cannot do that. If you're not a good driver and you get a 0% discount, you get a 0% discount. It's not like they can tack on another 10% because they monitor your driving for the last 3 months and now you're not a good driver in their eyes. They're going to increase your rates. So just keep that in mind. It's not a way for them to increase rates. It's only a way to basically benefit the good drivers that, again, can show that they're good drivers and save money that in a way that, again, a lot of other drivers might not be able to save.
Yeah. And the purpose of it, right, is obviously to provide some further savings for those that have those really kind of maintained, manageable driving habits. So if you're in that realm, it's definitely worth looking into if your company has it, or if not, maybe other companies do. And I think you're going to see more companies provide that moving forward as they get, obviously technology advances and more data is collected to say, okay, these types of drivers, are better suited for us. The discount percentage is helping them save more on their monthly rate. There's hopefully pros to both sides.
Yeah, I think especially for young drivers, like newer drivers, like every young person nowadays has a smartphone. So for you to already combat the high levels of insurance in newer drivers, why not do the driving app? Again, if you can save 10, 20, 30% as a new driver, why wouldn't you take advantage of that? It just, to me, I did it. I did when I was insured at 2 other insurance companies, I did both their driving apps. And again, I think the one time I saved like 18 and the other time I saved like 14%. And again, at the time I was like maybe driving for 2-3 years. So yeah, my premium was a little bit higher. I was also driving a Honda in Hamilton. So those 2 big factors right there didn't help my premium. But again, I saved big for just driving and having the app. And actually, the first one actually was, remember when you used to have to plug that device into your car?
Yeah, that was the first one, right into the diagnostic port.
Yes, I had that. And then the second insurance I had, it was on the app. So, but again, yeah, for new drivers, take advantage of it. Again, you're going to be your premiums are usually a lot higher for new drivers, so take advantage of them. Find a company or find a broker that can put you with a company that has a device like that or has an app that you can, again, benefit from getting a good discount right off the bat. And then as you continue growing your licensing and insurance experience, all you're going to see is discounts and lower premiums as you continue building that experience. So definitely, if you can benefit from it, definitely I would highly recommend doing it.
We'll do the home side because we just spent a bunch of time on the auto. Time gets away from us every episode, James.
I know. We always say before the episodes start, we're like, oh, like it might be a shorter episode, like, and then we kind of get into it and we just get into this groove and like it's great. And it's just like you look down, you're like, oh, we're already at like 28 minutes.
I know. So we'll recap a few things on the home that I think are very specific, easy ones, and then maybe a couple that are again more company specific. So I guess I'll highlight just 2 here, and then I'll let James kind of go back at it again. The two that are very basic are the multi-line, so the same as the car, and very simply put, as it makes sense, if you have your home and a car with the same insurer, you're more than likely going to get a discounted range for having those both of the same ones. Very simply put, right? Have them together, whether it's your condo, your tenants, your property, with a car. Usually, and I'll make a disclaimer that normally a rented property, so like a rental place that you're renting out to somebody else, that does not count because that's not your primary residence. You're renting it out. So people should be aware of that. The other discount that is a large one that is very specific and very easy to get if you're in that position financially is the mortgage-free discount on homes. It could be upwards of, and I've seen this very frequently, 15 to 20% with different companies for just being mortgage-free. One quick note on that, if you have a secured line of credit against the house, from an insurance perspective, the bank or the lender still has, risk with that. And basically at that point, you're not eligible or qualify for it with most of the companies. So they look at a line of credit the same way as a mortgage. But if you don't have either one of those and you are mortgage free and there's nobody else, attached to the house, it's free and clear, 15 to 20% off your home insurance.
Lovely. Just for paying off your home.
Yeah, they love it. They love it.
I'm going to kind of go over one here, which kind of pertains to same thing on the auto side, but what we call on the home side would be basically claim free. So very, very self-explanatory. If you've never made a claim on your home, there are some companies that will basically give you a claim free discount as well. Again, a smaller discount, usually upwards of 5%, I believe. Mike can quote me if I'm wrong, but again, a smaller discount for basically not making any claims in your home. Again, if you haven't made one, great, you're going to save a little bit more money. But again, if you have, insurance is there for a reason, so don't think you're a bad person for making claims on your home.
Yeah, you know what? And it's not a correction, but I think some offer up to 10. James, I've seen as well.
Up to 10. Cool.
But again, it's not that's not 20, right? You're seeing 5 or 10% usually with most. And even some are now building it right into their algorithm behind the scenes. So it just will say if you've been claims free, it'll kind of help with that rate, but it might not necessarily show on your documents moving forward.
The next one, and the next two that I'm going to talk about are also discounts that we could have talked about the auto side, but we kind of grouped them into the home side. But the retired discount. So again, if you're retired, you're not working, there are discounts for both the auto and the home side that basically discount your policy, obviously, for being retired. Again, that discount is going to differ depending on the company that you're with. The second one, this is company specific because right when I say the name, you'll understand why. But the CAA membership discount. So if you're a member of CAA, so like the roadside assistance, if you're also insured with CAA insurance, they'll give you a higher discount for that. Honestly, I tell all my clients that are with CAA, it is almost 10 times out of 10 worth just getting getting the membership, because the membership is I think the lowest membership's like $50 or $60 a year, and the discount easily pays that off right away. So getting the membership is probably the best thing you could do if you qualify with CAA, and CAA is a market that is very competitive for your insurance needs. And like I said, getting that discount or getting that membership basically pays for that membership anyways.
Yeah, if you have home and auto with them, James, it's the membership on the home side is automatic 10%. If you start as a new member, it's 5% on your auto, and that can fluctuate all the way up to 20% depending on how long you've had that active with them over the years. And I have actually a handful of clients that are a very, very good fit for CAA, good drivers, fantastic houses, and they've also had roadside for a number of years. And I have many people that are upwards of that 15 or 20% in that category.
Yeah, again, just being a member of their roadside assistance program is going to save you money on your insurance. So why not benefit from it if you've been with them, or if you're thinking of wanting to go with them and getting the membership, not only to protect yourself and your family, if you break down the side of the road, and now is also going to basically help you on your insurance premiums as well.
The other one too that I wanted to touch base on, because I love this one for people that qualify for it, is age of home. It could be a discount or a surcharge. I'll obviously highlight the discounted side, but depending on which provider you're with, usually behind the scenes, if you have a home, and it does fluctuate, so I'll just say this generally speaking, but if it's newer, it could be upwards of 20 to 25%. I know it's a monster number. Insurance companies love new homes from a building perspective. And then as the home gets older, you will typically see that age of home discount lower as the home gets older, obviously. So that could go down anywhere from back down to nothing, but over those years. So if you have a brand new home, usually it'll get built right in. Some companies you have to apply it, but regardless, it could be significant depending on what you're buying.
And kind of piggybacking off that whole age of home, but there's also another one that bases what we call the maturity discount. So some companies, depending on the age of the actual client, CEA actually gives this discount at a very, very ripe age of 40 years old. And it's so funny because I tell all my clients, they're like, am I getting a senior's discount? I'm like, well, if you want to really classify it as that, then yes. But again, some companies are anywhere from 50 to even 60 years old. Like I said, CEA gives it at the ripe age of 40. So you could actually get another discount based off how old you are.
And the age, that's more of the age of the insured, right? So you're looking at typically the people that own the home that are deeded to it. Those are going to be the quote named insureds of the policy, the ones that own it. So both of those are big things. And actually, one thing going into something very quick, James, that I know we didn't discuss before, but I was thinking about it. Built in now, and it's not really a discount, it's just more or less built into rating categories for home insurance, is depending on behind the scenes credit score, that actually can help with home insurance costs quite a bit as well.
Yeah, if
that's a lot. There's a lot more to that, so I'm not going to deep dive into that because it's not black and white. And it's not enough for what we're doing on this episode.
Yeah, that's a very in depth. That's a lot of like how behind the scenes, like you said, rating goes into it. But yes, you can, depending on with some companies, they do obviously give better rates when it comes to how your kind of credit, especially on the home side, not on the auto side, but on the home side.
And actually, I'm gonna make a note that we will do a part episode whenever we do a home episode, if it's shortly coming up or whatever we'll schedule here. We'll do a part about what we know on the broker side about that, just because I think it'd be very interesting for people to understand how that works on a general level.
Yeah.
At some point. There was another one.
Yeah, there's two more. I know you want to talk about water prevention.
Yes, and these are very, very straight to the point specific. But if you have, let's say, a sump pump in your basement and or a sump pump with, let's say, a battery backup on it, and or a check or backflow valve, if you're on, like, let's say, main sewer lines that come up and it's in the basement, your main external kind of sewage line exiting your house, and or again, this is on a further prevention, a generator, which I know a lot of people nowadays have for power outages where their sump pumps do go out. If you have any of those four, huge thing to let us know. I'll typically always ask it anyways if you have anything in your basement as more of a talking point to see if you maybe, because a lot of people don't always know when you're buying a property. But if you do, let us know, think about it, even installing it, because water rates in general are becoming a massive talking point with respect to home insurance. And I know we've done a brief episode and conversation on this, but from a discount perspective for this episode, those things are built in typically behind the scenes to help lower the amount you're paying for the water premium on your house. So having a sump pump or a sump pump with a battery backup, or that, that check valve, and or that generator, or even monitored water, like kind of alarm system, all those things, James, can help clients save money on their home insurance.
Not only just save money, but save a huge headache from like water, like leaks and stuff, right? The last thing you want to do is go on vacation, or maybe not. Like, again, there's like rooms in the home that you like. I never go into like some of the rooms in my basement, right? But again, if you don't go into your basement for like a week or something like that, and you find that there's a massive flood, and you could have prevented that, or like at least you could have a preventative measure that would have like alarmed you or notified you that something's been leaking. Again, it's just, the discount is great, but I think it's also the prevention of there being any damage to the home is just as valuable.
Yeah, totally. Totally. At the end of the day, you really don't want, I mean, as much as we pay insurance and if we have a claim, you want to utilize it, fair enough. And in a perfect world, you don't want to have to go through a basement rental from water claim, right? That's the worst case scenario for that. So if you can save some money on your insurance and also prevent that claim from happening, that's the best of both worlds.
Exactly. Moving on to the final one that we have for homes, we have security and alarm systems. So there are a lot of companies out there. Like I know Bell and Rogers offer something similar like this, where they offer like basic an in-home like monitoring system. There's third-party ones as well, but there are insurance companies out there that will basically give discounts. And I've actually seen some insurance companies upwards of 20%, depending on what kind of security system you have in your home. So again, not only does it protect yourself and your family and your home from anything like thieves or vandalism or anything like that, break-ins, again, kind of just give you a peace of mind. Again, it could also give you a discount on your insurance. So if you have one already and you might not have disclosed that to your broker, or you recently got one and was like, oh, I forgot to tell my broker I got a security system put in, definitely update your broker or agent, because again, your insurance might actually have a discount in regards to having a security system on your home or property.
Yeah. And again, it can be small, but it certainly does help. If you're already going to do it for your own peace of mind, then don't forget about updating your insurance with it.
Yeah, because even a 5% discount or whatever it might be, even on the low end, like that's paying basically for a little bit of the security. I know security systems can be a little bit pricey, but if you can get 5% back just from your insurance alone, like it's more money in your pocket.
Totally. Yeah, it's worth it regardless, right? And you might not know that it's being offered, and maybe your company doesn't, but it doesn't hurt to be an informed client, right? And know about some of these.
Yeah, again, these are things that some of them are very generalized and very common. A lot of people probably ask about them even when they're quoting, and some of them might not be. So that's why we want to kind of make an episode about things that people can save money on. There's probably another 100 different discounts that we're probably not talking about that are very specific for companies. But we just kind of wanted to narrow down a few very common or general ones that, one, people probably know about, but we want to just make people more aware of, or two, might not be aware of. And again, there are massive discounts that people might be missing on their insurance. So again, just to kind of get people more aware and educated that these things can save you money on your insurance. So if you can, definitely benefit from them.
Yeah, totally agree. I mean, we hope that part of the reason we want to do an episode like this is to just share what I would think, what we probably both think, James, is common knowledge stuff to us, but it does not mean that everyone knows about this. So if there was any insight, that's hopefully that's a win.
Exactly. But yeah, kind of moving forward, we do have a guest that we're going to announce later on in the month that's going to be coming on for March. We actually have another guest that I'm kind of in talks with right now to get on as well. So we possibly have two guests for March. I know we have one definitely confirmed already. It's just basically getting the other one confirmed as well. So I'm super excited about that. And we actually do have a few episodes already kind of planned ahead that where I'm really happy about, especially going into springtime. We've talked about doing an episode of like spring cleaning, almost like getting ready for spring, especially on the home side, making sure your home's ready for, again, the melting of the snow, higher water levels, just kind of prevention like that. And then on the auto side, actually kind of getting those recreational vehicles back on the road. So like your summer cars, your bikes, dirt bikes, boats, that kind of stuff. So look out for episodes in the future on that. Again, as the warmer weather comes, we just want to make sure people are educated and making the right decisions, again, when they're putting these toys or summer cars back on the road.
Yeah, there's going to be, I know that we've had a very mild winter, so maybe we'll hold off for that for a bit on the snow melt one, but that's a huge thing in the springtime. So I'm excited to get into that when the time comes.
Exactly. But again, thank you guys so much for the support you guys have been showing us on all the streaming platforms, on YouTube. I know YouTube right now is literally just our recordings on a different platform, but in the future, we are hoping to go on a kind of a video thing. If we either just do like a video either in person or we kind of do like a video conference and we're at two different places. Those are things we've talked about in the future. But again, we want to thank everyone for tuning in. We are close to hitting that 500 view mark. So we're really, really excited for that. And again, we just want to thank you guys for tuning in every week and deciding to choose our podcast over the 1,000 other podcasts you can listen to.
Yeah, I love it because who knows? I don't even know how many insurance ones are out there. I know our topics, our industry is pretty bland to most, and it's a necessary evil. But I love chatting about it. So this is a weekly thing I look forward to doing.
Exactly. Like I said, I look forward to it every week. So I'm really excited. And again, if we can give our clients and our listeners a little bit more education, I get messages all the time from people that listen. They're like, "Oh, I didn't even know that. I've been insured for 40 plus years. And I never knew that was a thing." So
right.
When I get those messages from people, I'm like, you know what? I feel really good about doing these episodes because I feel like I'm giving education and knowledge to people that thought they were knowledgeable, but then they're like, "Oh, I never knew that." So
that's what we do. What we do is for that reason, right there.
Exactly. But again, thank you guys for tuning in, and we will check you guys next week.